So you're ready to invest a lot of money, 100,000 euros or more, in stocks and ETFs. And you're wondering which brokerage or investment platform you should use. Everybody online talks about Trade Republic, Revolut, or Trading 212, but these seem designed for beginners with small accounts. So how do you find a solid, reputable brokerage for investing and safeguarding a larger sum? Well, every year I use my almost 2 decades of professional investing experience to research the biggest brokerages in Europe and to identify the best choices for my students. Unlike most reviewers online, I don't accept any sponsorships, so I can be brutally honest. And in this video, I will reveal the top brokerages that I trust for large amounts, including for my own 7-figure portfolio. If you want to jump straight to the brokerages, use the timestamps below. But if you're new to investing, I need to make 4 important points about brokerage safety. Because if you don't understand this, your money could be at risk. First, if your brokerage goes bankrupt, you do not automatically lose your investments. As long as you use the legitimate website of a licensed brokerage, your money and your investments are really well protected. That's because by law, your investments sit separately from the brokerage's own money. And that means your portfolio is almost never affected even if the brokerage collapses. But here's my second point. Almost is not the same as never. In cases of outright fraud, like with Peregrine Financial in the US or Beaufort Securities in the UK, investors can lose money. In other cases, like MF Global, technical incompetence or poor decision-making can also put client assets in danger. This means that all brokerages are not the same in terms of safety. If you're planning to invest serious money, it pays to do your research and pick a firm that you can trust. Because the third point I must make is this. In most European countries, government guarantees for brokerages are minimal. If you hold cash in a bank here in the EU, you are protected up to 100,000 euros per bank. But for investments like stocks or ETFs held with a brokerage, the standard EU guarantee is just 20,000 euros. If your brokerage fails and funds appear to be missing, that is how much is protected. In the UK, the protection is £85,000, while in Switzerland, there is no government protection for investments at all. Now, this is not a major problem. As I mentioned, licensed brokerages are extremely safe by design. But if the worst does happen, if there is fraud, if assets are missing, there is very little safety net. Okay, and then there's the fourth point, which has nothing to do with the financial strength of a brokerage. And it has everything to do with a 3-letter acronym called AML. AML stands for anti-money laundering. Basically, your brokerage is legally responsible for making sure that it's not used to move around money that comes from crime. Every brokerage today has automatic systems watching your activity and looking for suspicious patterns. If certain red flags appear, your account will get frozen until an investigation is completed. And this can take anywhere between hours and months, which means you can lose access to your money even if you haven't done anything wrong. Now, there is no brokerage today where you are completely safe from this risk, which is why I recommend wealthy investors should use 2 or 3 different brokerages. But if you're about to invest a large sum of money, it is much less likely to trigger red flags if you use an established brokerage that commonly deals with large accounts. So that said, here are my top choices for investing a large amount of money. For each brokerage, I will look at safety, product access, fees, and the user experience. First up, we've got the largest online brokerage serving clients all over Europe. It is the brokerage that my friends in the financial industry use the most. It has also been one of my main favorites for years, although it does have some significant drawbacks that I'll address in a minute. Of course, it's Interactive Brokers. First, let's look at safety. Interactive Brokers is a massive American company which is part of the S&P 500. It's a public company trading on the NASDAQ, and it has an A- credit rating from Standard & Poor's, which for a brokerage is considered very high. In 2025, Interactive Brokers earned revenues in excess of $6 billion and almost $1 billion in profits. And as of April 2026, they held $871 billion in assets for around 5 million clients. Now, this equates to an average of approximately $174,000 per account. Clearly, Interactive Brokers is a firm used by many wealthy investors. Also, many other banks and brokerages around the world rely on Interactive Brokers technology and infrastructure to provide their clients with market access. Now, as a European investor, you will not be dealing directly with the American Interactive Brokers. Instead, you will be investing through its European subsidiaries. If you're based in the EU, your account will be with Interactive Brokers Ireland. If you're based in the UK or Switzerland or a different European country, you will use Interactive Brokers UK. And this does affect safety a bit. At Interactive Brokers Ireland, your cash and investments are held in Europe. That means the EU standard protection of €20,000 applies. At Interactive Brokers UK, you benefit from the UK's £85,000 protection. But for UK clients, much of your cash and investments will be held through the American company, Interactive Brokers LLC. This means you get so-called SIPC insurance of up to $500,000 per customer in securities, including up to $250,000 in uninvested cash. Overall, while nothing in life is 100% safe, Interactive Brokers gets top marks on safety from me as arguably the most reputable brokerage in the industry. Next up, let's look at product selection. What can you buy through Interactive Brokers? Well, in my experience, you can buy pretty much anything you need in terms of standard financial products like stocks, bonds, ETFs, mutual funds, and so forth. If you browse around the Interactive Brokers website, you can see that you can access 170 plus markets and all kinds of financial investments. Now, most of my students use Interactive Brokers for investing in ETFs, and here the news is pretty good. Basically, any ETF that you're interested in, chances are Interactive Brokers has it. If you're based in the EU or the UK, you are restricted to European domiciled ETFs. So these are typically ETFs based in Ireland or Luxembourg. If you're based in Switzerland or another country, you can also access US domiciled ETFs like the popular SPY. But other than that, there are no significant restrictions. Basically, no matter if you're based in Latvia or Greece or Germany or England, you have the same wide selection of ETFs available at Interactive Brokers. And this is a significant advantage because, as we'll see in a second, other brokerages sometimes have significant restrictions based on the country where you live. Next up, let's look at fees. Now, if you look on the Interactive Brokers website and the section pricing, you will see a lot of different price lists. If you're going to be investing in ETFs, for example, the only real fees that you have to think about are commissions when buying and selling. So for example, on the website, I can go to commissions and stocks and ETFs. And then to figure out the exact fees that we'll pay, I have to select the region, like the European region. I have to select the stock exchange where I will be trading, which is actually quite complicated because, as we'll see in a second, this is hard to guess ahead of time. Interactive Brokers uses a system called smart routing, where it tries to find the best price for your stock or ETF on different stock exchanges. But let's say that I know that I will be buying in Germany on the Frankfurt Stock Exchange, and then there's a complicated table where you basically need a degree in math to figure out what is the exact fee that you're going to be paying. But at the end of the day, usually for small amounts, the fee is 2 to 3 euros per transaction. And for large amounts, it's going to be 0.05% of the trade value. One little nuance that is worth mentioning about Interactive Brokers fees is that you can choose between what is called tiered pricing and fixed pricing. By default, when you open an account, you have fixed pricing. Tiered pricing changes depending on how much you invest. If you're investing in ETFs here in Europe, usually I find that tiered pricing is a tiny bit cheaper. Another major advantage for Interactive Brokers is currency exchange fees. Interactive Brokers offers some of the lowest fees for exchanging currencies that you will find anywhere. So basically, in terms of financial strength and product offering and fees, Interactive Brokers is the industry leader. But now we come to an aspect where Interactive Brokers is a bit weaker, which is the user experience. Interactive Brokers is arguably the least user-friendly brokerage out there these days. And I say this with love. I've used this platform for years. I've taught many beginning investors to use it, but that's just the reality. To start with, there are many different platforms that you have to choose from to use Interactive Brokers. You can use the web-based client portal. You can download the IBKR desktop app. You can use the IBKR mobile app, but there are actually two other mobile apps as well, the Global Trader app and the Impact app. And then there's the Trader Workstation, which is a really technical platform for active traders. Now, For most long-term ETF investors, I would just use the client portal. It's the simplest to use. It doesn't require installing anything else. But the mobile app can be okay as well. And IBKR Desktop has some really useful functionality, like being able to specifically select on which stock exchange you want to buy or sell. So if that is important to you, you have to explore that as well. For now, for a quick demonstration, let me log into my client portal and show you around. Okay, so here we are in the Interactive Brokers client portal. Now, the first view is intuitive enough. You can see the value of your account. You can see a chart of how that value has been changing over time. You can see how much cash you've got available. And you can switch through here and look at your positions in your portfolio. You can look at a cash report, how much cash you have. This is where you can convert currencies if you need to. So that stuff is fairly straightforward. The tricky part begins once you decide to start investing. So let's say I want to buy an ETF. Maybe I go to justetf.com and I select the most popular ETF in Europe, the iShares Core S&P 500 ETF. So I click on it. I select the ISIN. This is a unique identifier that identifies this fund. Go back to Interactive Brokers and put it in the search bar. And immediately I'm faced with many different choices which are not self-explanatory at all. This is the least intuitive search bar of any brokerage that I've used. Can you tell me what is the difference between SXR8 STK at Smart and CSPX STK at Smart, CSP1 STK at Smart, and SXR8 STK at AEB? Probably not. I mean, SXR8 is the so-called ticker. It's like a symbol that represents a fund. But the trouble is, Interactive Brokers sometimes uses different tickers compared to other brokerages and compared to what the fund provider themselves are using. STK means stocks, so ETFs are treated like stocks at Interactive Brokers. And then you have this at part, which talks about which stock exchange this ETF sits on. But this is confusing because you've got at Smart. That means Interactive Brokers will use smart routing. It will look for the best price on different stock exchanges. But then if I go down here, I will see at AEB, which would suggest a specific stock exchange, AEB, the Amsterdam Stock Exchange in this case. But anyway, I know that this is the Amsterdam Stock Exchange, so I think, well, if I click on this and open up this ETF and I hit buy, surely I will buy it on the Amsterdam Stock Exchange. But not so fast. If I look here, I see something else. Next to the fund name, I see Ibis 2. What is this Ibis 2? It sounds like something from Egyptian mythology, but actually Ibis is an old name for an electronic trading system used by the Frankfurt Stock Exchange 30 years ago. They don't use it anymore, but Interactive Brokers uses IBIS to refer to this old system. So how did it happen that I clicked on something that said Amsterdam Stock Exchange, and now I've got this symbol which is referring to the Frankfurt Stock Exchange? But actually, if I put in an order, I might not buy it on either of those stock exchanges because Interactive Brokers is going to use smart routing and give me the best price wherever it finds it. So basically the choice is pretty much meaningless. And don't get me started on this performance and reports section where you've got a plethora of different kinds of reports that you can pull out from the system, but one is more confusing than the next. I just wanted to give you a quick glimpse of how tricky it can be to figure out the Interactive Brokers user interface and learn how to start buying stocks or ETFs. So basically, to sum everything up, Interactive Brokers is a top choice for wealthy investors and for large account sizes. The only sacrifice you have to make is some time and effort to learn this technical, non-intuitive user experience. But if you're willing to do that, it's a great brokerage to use. And to be clear, if you want to invest a lot of money, I think it makes complete sense to learn how to use Interactive Brokers. Over the years, I've trained thousands of complete beginners to use this brokerage in the Index Masterclass, my step-by-step training program for ETF and index investors. So if that sounds useful, you can check out the first link in the description to find out more. But now let's move on to the next top brokerage on our list. This is a Danish brokerage with 3 decades in the market and a stellar reputation. I'm talking about Saxo. First up, let's look at safety. Saxo has full banking licenses in Denmark and in Switzerland, so it is supervised by some of Europe's top regulators. The same as Interactive Brokers, Saxo has an excellent A- credit rating from Standard & Poor's. It is not a public company, but it's majority owned by the Swiss private banking group J. Safra Sarasin. Saxo is smaller than Interactive Brokers with 2025 revenues of around 664 million euros and total client assets of 133 billion euros across around 1.5 million accounts. But its average account size of 89,000 euros is still one of the highest in the industry. Saxo is another broker that is very popular with my professional investor friends and wealthier students. And just as with Interactive Brokers, many European banks and brokerages have built their entire broker infrastructure on top of Saxo technology. Basically, Saxo also gets top marks on safety from me. This is a reputable, solid firm, and I personally invest multiple six figures through them. Next up, let's look at product access. Saxo's coverage of different global markets and products is not quite as comprehensive as that of Interactive Brokers, but it's definitely up there. If you look at the Saxo website, you will see that you can invest in stocks or ETFs or mutual funds or bonds. You can also trade options and CFDs and Forex and futures and commodities and all kinds of financial investments, most of which are probably not necessary or even dangerous for long-term investors. My main focus is long-term investing in ETFs, and unfortunately, this is an area where Saxo is not the strongest. Now, if you're based in a Western European developed economy, there's no problem. Saxo will give you access to thousands of different ETFs. You can build a wonderful portfolio. But if you happen to be based in a smaller country or in an Eastern European country like me, unfortunately, the selection of ETFs available through Saxo is very limited. You really have to check if the ETFs available are enough for your needs. Next, let's look at fees. A few years ago, I didn't recommend Saxo to most people because they were quite expensive, but then they cut their fees significantly. Now, the fees that you pay depend heavily on where you are based. So for example, if you go to the international version of Saxo's website and you look at pricing, there are two sections: commissions and spreads and general charges. I would first look at general charges because this has a pesky fee called a custody fee. Now, a custody fee is a fee that you pay for holding your investments. It is usually calculated as a percentage of your account size, which means the more you invest, the more you pay. And you pay this every year. So for long-term ETF investors, I'm really not a big fan of custody fees. For example, here we can see that by default, you pay 0.15% of your account size every year. Now, there are some countries, which I'm showing on the screen, where Saxo does not charge any custody fee. And then you have these other countries where you can disable a custody fee by agreeing to turn on securities lending. So this gives Saxo permission to lend your investments out to other investors. That said, it does add a little bit of extra risk, and it's kind of annoying that we have to enable this securities lending in order to get rid of the custody fee. Now, if you look at the actual commissions that you are charged when investing, we can go to ETFs here. You will see that the fee that you will pay depends on the stock exchange. For example, if you're buying ETFs on Xetra, which is the biggest market for ETFs in Europe, you will pay 0.08% of your order amount compared to 0.05% at Interactive Brokers with a minimum of 3 euros. Now, if you have a larger account size, if you get platinum or VIP pricing, you will pay less, but that's the default. And the last thing to mention is foreign exchange fees. In the case of Saxo, you pay 0.25% of the exchange amount, which is in line with other low-cost online brokerages. In any case, these days, buying ETFs or stocks on Saxo is quite affordable. I really don't see these commissions as an obstacle to investing for anybody except the smallest investors who are maybe investing 50 euros a month. Finally, let's look at the user experience. What is it like to invest through Saxo? Well, there are actually two different platforms that you can use. Both on the web and through your mobile app, you have a choice of Saxo Investor and Saxo Trader. Saxo Investor is supposed to be a simpler platform where you can buy stocks or ETFs or mutual funds or bonds, and Saxo Trader is the more sophisticated platform for professionals and active traders. But I personally actually prefer Saxo Trader. I find that information is presented in a better way, so let me start by demonstrating that, and then I'll also let you have a glimpse of Saxo Investor. At first glance, this brokerage interface does look a little bit technical, but once you understand what's going on, it's pretty simple. So here in the bottom half, you've got your portfolio, so you can see see what ETFs I have in my portfolio here. I've got a global small cap fund and an all world stock fund. You can switch over and see any orders that you have submitted but that have not been executed. You can see a history of your orders that have been executed here. So that's the bottom half. And then in the top half, you've got a screener where you can search for different stocks or ETFs or other investments. So for example, if I want ETFs, I could select that. Maybe I want to select equity, so that means stock ETFs. And maybe I want to invest in euros. And maybe I'm interested in global ETFs. So if I make some selections, then I'll get a list of funds and I can search through them and see if any of those look interesting to me. Now, honestly, I never search for ETFs using brokerage interfaces. I go to a portal like justetf.com, find what I need, and come back and buy it. So what does that look like? Well, let's say I'm on justetf.com. And this time, let me select the second most popular ETF in Europe, the iShares Core MSCI World UCITS ETF, which invests in developed world stocks. I select the ISIN, I come back, put it in the search box here. And I also get a bunch of choices, but not nearly as many as with Interactive Brokers. And in my view, these are significantly more intuitive. So I get the full name, so I can confirm that I'm looking at the right ETF. I have the ticker, then there's a colon, and then there's the exchange name. So AMS is obviously Amsterdam, and there's also the Dutch flag. SWX is the Swiss SIX exchange, and you've got the Swiss flag. You've got Milan here and Italy. You've got Xetra here and Germany. So it's pretty easy to understand what I'm looking at. Now, one downside is that I still don't see the currency at one glance. So if I want to buy in euros, I kind of have to click through and figure out which one is in euros. Okay, and I can see that, yeah, this one is in euros. Whereas if I click on this one, okay, that's going to be in dollars, and maybe down here or here, and we have a listing that we can buy in pounds. But in general, finding products on Saxo is significantly easier than with Interactive Brokers, and the trading is also pretty straightforward. I've got videos on how do you buy ETFs in my channel, so I'm not going to go through all of the details right now. Now, obviously, there's a lot more you can find in this brokerage portal. You can access this research tab and read a lot about what's happening in the markets. You can take a look at your overall portfolio. You can go to your settings and there's a bunch of stuff you can adjust. But at the end of the day, the key functionality is very simple. Now let's compare this to the other portal, to saxoinvestor.com. For whatever reason, I can't use Saxo Investor with my corporate account, so I opened it with my personal account. Now, in general, this first view is perhaps easier for a beginner to understand. You know, you immediately see your portfolio value. But on the whole, this interface to me is less convenient because instead of having all the information that you need in one convenient place, you kind of have to click through this portal. So if I want to find ETFs, I have to click on Markets and ETFs, and then Explore All ETFs, and only then I get this kind of filter that I immediately had access to in the Saxo Trader interface. And in general, these sections like Discover and Services seem to be full of these kind of graphical elements, which seem more like illustrations than actually of much practical use. To actually see what's in my portfolio, I have to go here to the main portfolio view. I have to click on these unintuitive names for the different accounts I have, and then I can see what assets I'm holding. So on the whole, I'm not such a big fan of the Saxo Investor platform, and I prefer using Saxo Trader. At the end of the day, though, whichever platform you choose, Saxo is pretty easy to use once you figure out the basics. I would say that Saxo is a top choice for serious investors who want to invest larger amounts of money, as long as you live in a country where you have access to the ETFs that you need and where the custody fees are either not charged or can be turned off. But of course, building a good ETF portfolio here in Europe is always a little bit tricky. That is why I teach ETF investing in a step-by-step training program for European investors. And if you'd like to learn more about that, just follow the first link in the description to check it out. Okay, but next up, we've got a brokerage that is a big favorite with my wealthiest students. I personally would never choose it for investing small amounts because, frankly, it's simply too expensive. But if you're thinking about investing multiple six figures or more, this could be very interesting, especially if you would like to invest through a fully licensed Swiss bank. The brokerage I'm talking about is Swissquote. First up, let's look at safety. Swissquote holds 2 separate banking licenses in Switzerland and in Luxembourg. So that means the attention of some of the most competent financial regulators in the world is on this company. You can choose to open your account with either the Swiss or the Luxembourg bank, even if you live outside of Switzerland. The parent company, Swissquote Group Holding, has been a public company on the SIX Swiss exchange since the year 2000. And if you translate the numbers into euros, it has a market capitalization of around 6.5 billion. The company earned revenues of around 788 million in 2025. And if you exclude the numbers for you, a small neobank owned by Swissquote, the company's client assets were around 94 billion euros. If you divide that by 800,000 client accounts, that's an average account size of around 117,000 euros, which demonstrates that this is a brokerage trusted by well-off investors. In fact, when I talk to financial professionals and private bankers based in Switzerland, Swissquote is the brokerage most of them use for investing their personal savings. And my wealthier European students often choose Swissquote as a way to have a proper Swiss bank account and hold some assets outside of the EU and the UK. Overall, for safety and reputation, I rank Swissquote right up there with Interactive Brokers and Saxo. Next up, let's look at product access. I don't have that much to say here. From what I've seen, Swissquote gives you access to pretty much anything a reasonable investor might need. Of course, you've got stocks and ETFs and bonds and investment funds, but also options and futures and structured products and much more. Now, as a long-term investor, I just care about ETFs, and Swissquote gives you a broad selection of ETFs on many different stock exchanges, so you will have plenty to choose from to build your portfolio. The real issue to consider with Swissquote is really the next one. This is probably the factor that will help you decide if Swissquote is appropriate for you at all, and it is fees. Swissquote is not a cheap brokerage, but the fees that you pay differ whether you open your account in Switzerland or in Luxembourg. If you opt for Switzerland, if you want to have a proper Swiss bank account through Swissquote, then get ready to pay up. First of all, Swiss account holders have a custody fee. So that means you pay Swissquote just for holding your investments. Now, unfortunately, Swissquote does not make the custody fee very easy to understand. It's not just a simple percentage-based fee. It's a quarterly fee that jumps up depending on the account size. It ranges from 20 to 50 Swiss francs per quarter, so that's 80 to 200 Swiss francs per year. Now, 1 Swiss franc is €1.09, so that gives you an idea. And then if you have a really large account above $1 million, then there's some extra custody fees as well. And the other thing is trade commissions. So when you buy stocks or ETFs through Swissquote, it's going to cost you a significant amount of money. With ETFs, you do get what is called the ETF Leaders Selection, where you can pay a flat fee of 3 to 9 euros. But in my view, this ETF Leaders Selection is very poor. If you are a euro-based long-term investor, there's almost nothing to choose from in terms of good global ETFs. So instead, you will probably choose ETFs that you have to pay full fees for, and their general stock pricing applies, which is frankly confusing. There's this table that you have to study to understand how much you will pay in fees. On the left-hand side, you have the trade amount in the currency in which you trade, and then on the right-hand side, you have the fees in Swiss francs. So for example, if you trade on Xetra, the German stock exchange, you will pay between 5 Swiss francs and 190 Swiss francs in fees every time that you trade. Now, this higher fee limit is reached at 50,000 euros. So if you're investing really large amounts, like many hundreds of thousands, it's not too bad. But for more modest amounts, the fees that you pay at Swissquote are significantly higher than at most other online brokerages. Plus, if you're investing with a Swiss entity, there's also the Swiss stamp duty to take into consideration. So every time you buy or sell a foreign, meaning non-Swiss ETF, you will pay 0.15% of the trade value in this extra tax. So basically, if it's important to you to have a proper Swiss bank account, then you will pay for it in fees. For many years, I really did not see the point. Now, as my personal portfolio has grown larger and I want to diversify, globally, looking at various geopolitical risks, I have finally opened my own account with Swissquote Switzerland. However, for smaller investors, for most people who are just starting out, I would probably not recommend it. Now, on the Luxembourg side, the pricing is significantly more affordable. So there's no custody fee, no account maintenance fee. There is an inoperative accounts fee where if you don't trade for several years, there's a significant fee, but that's easy to avoid. And then the trade fees are better as well for most people. So there's a much better selection of ETFs that you can buy with zero fees. And then if you choose a different ETF, you pay 0.1% of the trade amount with a minimum of 14.95 euros. So that's not fantastic, but it's not that bad at all. Okay, so if those fees sound acceptable to you, then we can move on to the next section, which is the user experience. So when you log into the web portal, you have this overview of your account with the total value and the buying power, and then you can go to the trade tab if you want to start investing. Now, this user interface for me is a bit cluttered, a bit difficult to understand at first glance. Here you can look at the buying power of your account or the performance or the total value. And then you've got this AI daily digest of news, which I personally don't care about as a long-term investor. You've got a confusingly named section called assets, but this seems to be mostly about how much you have in different currencies, not actual, assets like investments. Then you've got a section on any orders that are outstanding, which I don't have right now. Savings plans, where you can set up these repeated investments, where let's say you buy an ETF automatically every month. And then you've got positions. So this is what's sitting in your account. And this is something that I would normally also consider an asset. So right now I've just got one ETF here, the Spider MSCI All Country World UCITS ETF that I bought a few days ago when I was testing out the account. So this is the main view. Then you can go here to set up securities lending. You can make watch lists to follow certain financial instruments. There are various tools like screeners for stocks and ETFs. Quite a lot of tools for more active traders and investors. Overview of different markets, which I guess can be helpful to see what's going on around the world, and so on and so on. But I don't care about most of that as a long-term ETF investor. I just care about buying ETFs. And there, again, the process is pretty straightforward. So let me just pick an ETF from justetf.com. Let's take the next one on the list, the Vanguard S&P 500 UCITS ETF. Let's take the ISIN. Let's go back to Swissquote, put it in the search box, and I see a few different choices. So let me hit all results. So I can see from the name that these are all Vanguard S&P 500 funds. And basically I've got different listings. I can buy it in dollars on the London Stock Exchange, in euros on the Euronext Amsterdam Exchange, in pounds on the London Stock Exchange, in euros on the Zurich Exchange, and so forth. So this is actually a better outline of what's available than we had either with Interactive Brokers or with Saxo, because we see the stock exchange and we see the currency. So if I wanted to buy this in euros on Zitra or euros on Euronext Amsterdam, I would just hit trade. And then you get a pretty typical order window where you can put in how much you want and what is the limit price and so forth. And then, of course, you've also got other sections here like bank, because you can get a payments card. You can make payments from and to your account because you have an actual Swiss bank account in this case. And you've got this section plan where you can set up term deposits, or they also have like a robo-advisor, which is quite expensive, but you can take advantage of that if you like. Okay, but let's be real. With Swissquote, the exact features and user experience aren't really the main selling point for most people. This is a great brokerage for wealthy investors who want to hold part of their portfolio in Switzerland or maybe in Luxembourg. So if having an account with a reputable Swiss bank appeals to you, Swissquote could be a good choice. Now, there is another important factor that everybody should consider when choosing a brokerage, and that is taxes. In some countries, some types of brokerages are much better for taxes than others. For example, in Germany or Denmark, local brokerages make taxes much easier, while for Bulgarian investors, certain brokerages enable you to take advantage of tax rules that allow basically tax-free ETF investing. That is why in my training program, the Index Masterclass, I built country-by-country shortlists of top brokerages to use, as well as much more in-depth reviews and comparisons between different brokerages to make the selection easy for you. If that sounds useful, I encourage you to follow the first link in the description, book a call with my team, and find out more.